Most people think trading is difficult because markets are unpredictable. They believe they just need a better strategy, a secret indicator, or insider knowledge. But the uncomfortable truth is this: trading is not hard because of the market, trading is hard because of you. The charts are not your biggest opponent, your own mind is. Trading exposes your psychological weaknesses faster than almost anything else. In normal life, mistakes are slow. In trading, mistakes are instant and they cost money. Markets force you to make decisions under uncertainty, accept losses calmly, stay patient during boredom, stay rational during chaos. Your brain, however, evolved for survival, not speculation. It seeks safety, certainty, immediate reward. The market offers risk, uncertainty, delayed gratification. This is the internal conflict every trader faces. One of the biggest psychological traps is overtrading. You feel bored, you feel anxious, you feel like you must be in a trade. So you force setups that are not really there. Activity feels productive, but in trading, unnecessary activity destroys capital. Professional traders understand something powerful. Sometimes doing nothing is the most profitable action. Another silent killer is the need to be right. Many traders hold losing trades too long, cut winning trades too quickly. Why? Because closing a loss hurts the ego. Closing a small profit feels safe. This creates a dangerous pattern: small wins, large losses, and slowly the account bleeds. Professional traders don't focus on being right, they focus on managing risk. Beginners ask, how much can I make? Professionals ask, how much can I lose? This single shift changes everything. Before entering a trade, you must know your entry, your stop loss, your risk percentage, your target. When risk is defined, fear decreases. A planned loss is not failure, it is part of the system. Profitability is not about winning every trade, it is about controlling risk, maintaining positive risk to reward, staying consistent over hundreds of trades. You can be wrong 50% of the time and still grow your account. That is mathematical discipline. Fear of missing out, FOMO, is one of the strongest forces in trading. Price moves without you. You feel left behind. Your brain screams, enter now. But impulsive entries destroy structure. Professional traders do not chase price. They wait for confirmation, they wait for alignment, they wait for probability. If the setup is not there, they let it go. There will be another trade. Capital preservation gives you infinite opportunities. Discipline in trading means predefined entry criteria, fixed stop loss, controlled position sizing, trading journal, emotional awareness. When you follow a system, emotions reduce. Instead of reacting to price, you respond according to your framework. Trading becomes less emotional, more mechanical, more structured. Trading is not a sprint, it is a long term performance game. The goal is not excitement, the goal is stability, the goal is capital preservation, the goal is psychological control. The difference between struggling traders and consistently profitable traders is rarely a secret indicator, it is emotional maturity. Markets will test your patience, they will test your discipline, they will test your ego. If you focus on being right, you will struggle. If you focus on managing risk, you will survive. And survival in trading is power. Because in the end, trading is not about mastering the market, it is about mastering yourself. You don't lose to the market, you lose to fear, you lose to ego, you lose to impatience. Control those, and the market becomes manageable. Thank you.